Bitcoin has just lost a key support level for the first time in its history. Yes, we are definitely in a defining moment for the crypto markets. There is no doubt that we are in the small percentage of days where true capitulation occurs. We covered off the on-chain metrics of the last few days, and you can see that even longer term hodlers are now resulting to spending their Bitcoin at losses. We covered off that more than 50% of people look at their portfolio and see a loss in their crypto portfolio. And now I share with you this metric that the 300 moving average has been breached. This is majorly significant. We have not lost this level before in the history. And in fact, even the 200 moving average, which is what we had previously lost, was already a key level. So the fact that we lost that 200 moving average and now we've lost our 300 moving average, I'm going to spell out what this could mean for crypto and what could happen from here on in. Check out the links in the description if you want to buy any cryptocurrency. I personally use Bybit and BITGET for my trading, but of course be very, very careful with any exchanges and make sure you are diversified. Blue line we've got is our 200 basic moving average. Okay, this is not exponential, this is basic moving average. If you don't know the difference, ijaz.uk/TA, completely free TA course for you guys to go watch. But here you can see we breached that, right? We closed below it. We've got a weekly candle close below it in June when we had our Terra Luna situation. We then tried to work our way above it, running up to the 25,000. Everybody thought, okay, this is it. And then we've been sent back down it. And the latest FTX collapse has now taken us below the 300 moving average. And in fact, if we go back now and study the Bitcoin price, you can see that we have never breached this level. In fact, let's just do this together here. And you can see this period here, dating back to 2020 at the COVID period, you saw an emergency candle wick just within a panic week here, take you all the way down to touching the 300 moving average, but never closing below it like we have just had. If you go back even more, you see that the 200 moving average, the blue one, holds support, and that one has always held support going back into the history of Bitcoin. So this is a major level that we are losing right now on the Bitcoin price, and it's definitely something that is significant. And it's not the only metric which we're losing, right? We covered off the fact that from the number of wallets in losses, we're now at that level above 50%, which is what you normally see in the peaks of a bear market when you're getting ready to form your bottom. We're seeing long-term holders start to sell. We look to the MVRV, market value to realized value. Make sure you get caught up on the last couple of videos I was doing, because there's a lot of on-chain metrics which is showing us that the market has been in much better places, and we're getting to that really painful point. You can see that extreme fear is sitting at 22. Markets are nervous. You can see that wider equity markets continue to be nervous, let alone crypto, which not only has to suffer with the risk of appetite of traditional markets, but also the FTX collapse and all the worries that come from that as well. And anybody who thinks that the worries have subsided, let's just do this. Let's head on over to CoinDesk right now, weeks on from the FTX collapse. And what do we see? Just glance at this. Let's just understand what is the status quo right now. Binance allocates another 1 billion for the crypto recovery fund. We covered that off yesterday, right? So they've got 2 billion now in this fund. Binance CZ has put together a fund that if anybody's struggling or collapses, they're looking to help them out. So in other words, CZ is waiting for more people to tell him that he's insolvent. So he's expecting more pain ahead. Now let's look at the left-hand side. Let's see what else we have here. We have crypto exchange Huobi denies rumors it will merge with Poloniex. Normally, these types of companies merge when they're struggling, right? More insolvency. Join together and you're stronger in a bear market. Let's keep going down. US state regulators investigating crypto trading firm Genesis Global. Okay, again, more negativity around the FTX collapse, more regulatory scrutiny. We know what's going on with Genesis and the fact that they're struggling too. Crypto exchange Binance delists Serum trading pairs. So these are the Serum trading pairs from the FTX ecosystem that they're now delisting. Let's keep going, right? Bitcoin.org's Cobra must unmask to challenge Craig Wright's legal costs. More FUD, right? More uncertainty. Let's keep going. First Move Americas, Binance increases recovery fund. We spoke about that. Wrap BTC loses its peg. More fear, right? This whole issue around the Wrap BTC causing issues as well. Again, just so you guys have my view on it, stay away from these Wrap tokens, right? They're a necessary evil. If you need to use them, and then get out of it. I don't know why so many people are sitting on huge amounts of Wrap tokens. They're meaningless. Get to the coins, hold them in your custody, and then they're yours. Same with stable coins. Use them when you need to. Get out when you don't need to. You shouldn't just be sitting on huge amounts of lump sums of stablecoins or wrapped tokens regardless of where they're sat. Turkish authorities order seizure of suspicious FTX assets. Matrixport favors systematic Bitcoin call. Okay, so they're looking to, Matrixport are looking to raise 100 million. So everything you read right here shows you that this is a pure bear market. For those who weren't around in the run up to 64,000, in the run up to 69,000, things are very different here. You hear about Michael Saylor buying Bitcoin. You hear about Tesla buying Bitcoin and then looking to announce it. You hear about El Salvador adopting Bitcoin. You hear that Square are buying Bitcoin, Block, whoever. All these different companies were loading up. Different countries were interested. There was exciting news about, are we going to get a spot ETF? That is what you see as in a bull market. Right now, do you see any of that on this page right here? No, because we are in peak fear right now and everybody's focused around fear, worry, more pain to the downside. Let's take a look at this because I wanted to speak about this as well, and just to put this on the record, because I spoke yesterday about the fact that we don't want to put CZ on a pedestal. And look, I know it's easy to do that, right? Right now in this market where you've had so many people let you down, you want to trust that CZ is this amazing figure that can do no harm. But the reality is, even though he's doing a great job, let's not put him on a pedestal. I'm not saying that he's done anything wrong. I'm not saying that I think he's going to do anything wrong or he's anywhere near Sam Bankman-Fried. That's not the point. I'm saying let him just do his thing quietly. Why do we need to put him on a pedestal? We don't. Just let him do his thing. Let him build an exchange. We don't need to put the spotlight on him, because if anything was to materialize, then we're back in that square where we go, you know what, we place so much reliance on him and now we've been let down. And another thing I do want to point out is we're talking a lot about this $1 billion Seifu insurance fund, right? So this is to make sure that your funds are protected. Now, obviously, Binance shared the breakdown and they shared the fact that 44% is in BNB token. Now, this immediately raised an alarm for me. Now, this doesn't raise an alarm in the fact that these BNB tokens are like FTT. No, FTT was completely different. They were hugely levered up, they were borrowing against it, and they were creating Ponzi dynamics. I'm not saying that that's what's happening here with Binance, but the fact that you got 44% of your fund, of your backup fund, in your own token doesn't spell well. Let's say there's a bank run on Binance or there's some FUD spreading around Binance. People start running to take their money. BNB is going to get sold off as well. BNB will get sold off as well, and the value of BNB will drop quick. So that 44% will fall to 22%, 10%, and so suddenly half of your Seifu fund is not what you thought it was. And this is the problem with using your own exchange tokens. Brian Armstrong at Coinbase has spoken about this. You should not have your own exchange token. There's a lot of conflict of interest in having your own exchange token. So this is dangerous here. If there was a run on Binance, which I'm not saying there is, then you could see this cause a problem, because you shouldn't be sitting, your fund shouldn't be sitting there with 44% of your own token. Now, CZ did respond to this, and CZ did say the Seifu Insurance Fund 1 billion USD equivalent is roughly split between BTC, BUSD, and BNB. Just that BNB price rose faster than BTC since rebalance. But still, that's not the point. You have to keep rebalancing, right? This has got to be much smaller. That is, how can you have double the percentage worth of BNB to BTC? You've got to keep that steady. It's not, if you're managing that, it's a portfolio. You've got to manage it. You've got to rebalance it. You should know better than to have this Seifu fund 44% weighted to BNB, which if anything did happen to Binance is obviously going to fall. So that's one of my qualms here, and I do just want to point that out for you guys as well. Hopefully we'll never need that insurance fund, right? Hopefully they can remain solvent and not have any issues. The other thing I did want to bring up as well is everybody's playing this game around, and CZ kind of kicked it off as well in terms of providing proof of reserve. And whilst I'm all for transparency, that's really good. The more information you give the markets, the better, particularly in this difficult time when we're questioning everything. And it's our job to be paranoid. We've got to be paranoid because today, none of you guys, the people in power, have given us any reason to trust you guys. Why should we give you the benefit of the doubt? Why? Has that worked well for us? No, it hasn't. So we should scrutinize everything. We should question everything. Any piece of data we get, we should dig deep into this, because the reality is, it's crypto YouTube and crypto Twitter and all these people, individual minds like you and I, who get together and we're figuring this stuff out. Because it's not like Sam Bankman-Fried or the regulators or anybody else who can do it for us. We are doing that. We're doing the research and we're uncovering these bad tactics. So anytime we hear, oh, you're just spreading FUD, dig deeper. Dig deeper, because so what? If it's FUD, great. Right? At least we're trying to be safe and we're trying to find out the truth from the mud, right? So let's do that. Coming back to this proof of reserve. So the whole point of this proof of reserve was to say, you know what? If you're an exchange and you hold customers' money, prove that you hold the money, right? Prove that you hold the money. But the problem with that is everybody's publishing these proof of reserves, but nobody's including the sum of the liabilities. What liabilities do you have? To keep this really simple, I don't care if you hold 10 billion, which matches up with customers' 10 billion, if you have another bunch of debt which you could be cross-liaising with each other. You could be using customers' funds to cover off some of those debt, right? Or be used as collateral. This is what we saw with FTX. So this, this is not foolproof. Yes, it's an okay start that you're at least giving us some proof of reserves, but by all means, we've still got a lot more work to do in this space to bring out that transparency. Let's come back here to Bitcoin. Bitcoin is closing below this 300 moving average. It is not a great sign. I am expecting more pain personally. Like I said, even though we're below, we have not retraced as much from all-time highs down to the lows as we have in previous markets. That could take us down to 10,000 levels. So I'm not ruling out anything around that 12, 11, 10,000 mark, and I will have limit orders ready to buy at those levels. Maybe we'll never get there, but those are statistically relevant levels based on the retracements we've seen in previous markets. Now, the argument can be made that each cycle the retracement should be less, right? Because the market's becoming more mature, there's more people, there's more diamond hands, right? We should be better. But when you've seen such a horrible bear market like we've had, does that really justify that the market's got stronger? Even though, yes, I do think the market's got stronger, the sentiment is not that way, right? The FTX collapse, Luna, Celsius, Voyager, this has been a long, painful bear market. So we cannot rule out this idea that we could be needing that 85% retracement from all-time high, which brings you closer to that 10,000 level. We need the markets to respond, right? We need the markets to respond, but the markets will not be ready to respond until this FUD and this cloud starts to die out. But the problem is there's still so much more on the horizon. US markets have still not seen a sign of improvement. You've got the FOMC meeting in a few weeks on the 14th of December. Will we see 50 basis points? That could be the start. That could be the start of some positive news. And if we could build some momentum and the equity markets are moving and the FUD from crypto is settling down, then maybe, just maybe, we can get our correlation back with the equities. And as equities are trying to get a rally around Christmas, maybe we can too. But I'm staying on the cautious side. I'm getting ready for lower lows because that is the opportunity to accumulate and buy. And ultimately, if you're not buying now, you have to ask yourself, what price point will you buy up? And I think that's the question I'm going to leave you with today. Thanks for watching, guys. Don't forget to smash the like button. Don't forget to subscribe. Check out this video here, and I'll see you in the next one.